Happy Friday out there, friends. This is Darius Dale here to present our macro minute for Friday, September 23rd, 2022. Starting with markets, we got stocks down here, commodities way down, crypto down, dollar up, global bond yields down. Market moving headlines, we got bad PMIs. Bad PMIs. Just when we're getting monetary tightening, you got to come through and spoil already spoiled parade. So, preliminary September PMI data from around the world left much to be desired in the direction of stabilization. Instead, we saw broad-based slowing and contraction, particularly in Europe, where it is most expected as investors. Where it's most expected by investors, as evidenced by deeply depressed relative valuations for the region's equity markets and peripheral sovereign debt markets. So, in terms of just looking at the countries that have reported thus far, above 50 and accelerating, we got Australia's manufacturing of PMI, Australia services, and France services. No countries were above 50 and decelerating. Below 50 and accelerating is UK manufacturing, and then below 50 and decelerating, you got French manufacturing, German services, Eurozone manufacturing, Eurozone services, and UK services. So very clearly the energy problem, we're not going to call it a crisis because they have enough storage, but the problem in Europe is obviously very clearly in terms of rationing is weighing on output, but obviously it's very much priced into markets if you look at some of the relative valuation metrics we use here, 42 Macro. Shifting gears. You heard it here first, back at the beginning of the year, that cash is king. Cash will be king. Allegedly, you weren't supposed to have cash when inflation's high, but guess what? It's better to be down 9% in inflation-adjusted terms than down 30-something% in inflation-adjusted terms on the equity market, or nearly 40% in the fixed income market. So cash had inflows of $30 billion. As global equity funds saw outflows of $8 billion in the week through September 21st, Bank of America said, citing EPFR global data. Bond funds lost another $7 billion and $400 million left gold. So guess what happens? When the 3-month T-bill yield is over 3%, you don't need to be levered long equities and bonds in 60-40. And increasingly, as the Federal Reserve continues to hike interest rates to a more restrictive setting, you're going to continue to see an outflow from fixed income and equity as investors realize that, hey, their cash is not trash, according to my friend Ray Dalio. Big movers, MSCI Emerging Market Index off 2% this morning to down 8% month over month. Thought that was interesting that it's outperforming the SPY on a month over month basis. SPY is down 10%, S&P 500. So it tells you where people are and where they aren't. Bloomberg Agricultural Index minus 2% to plus 2% month over month. You got Bloomberg Industrial Metals Index minus 3% today. It is down 7% month over month. And then WTI crude oil minus 4% to minus 11% month over month. There's a real rinsing of latent longs in the commodity markets this morning as the dollar pushes to overbought territory. So shifting gears to our volatility adjusted momentum signals and probable ranges. Bullish VAMPS dollar overbought this morning. Just mentioned that. Gold bearish VAMPS not quite oversold yet. 10-year nominal treasury yield bullish VAMs that is finally overbought. High yield credit spreads bullish VAMs not quite overbought but getting there. S&P 500 bearish VAMs not quite oversold but getting there. Neutral VAMs of VIX not quite overbought. Got about another 5% upside to 31 handle on the VIX. NASDAQ 100 neutral VAMs that's oversold. Russell 2000 neutral VAMs that is oversold. Bitcoin bearish VAMs right in the middle of the range there. Ethereum bearish VAMs got about 2% of downside to the lower boundary of the probable range. Shanghai Composite neutral VAMs that is oversold. WTI crude oil bearish VAMs that is in the middle of the range. Ag bearish VAMs bouncing off the upper boundary of the probable range there. Industrial metals bearish VAMs got about 2% downside to the lower boundary there. So with that, Darius Dale presenting our macro minute for Friday, September 23rd, 2022. Best of luck out there today and have a great weekend. Catch you back here on Monday. Cheers.